If you're a real estate agent, at some point in your career, you're going to hear that some companies might offer stocks, stock options, stock grants. And that's the great thing about real estate is there's no one company that's a one size fits all. Every single company offers something different. And the buzzword right now is stocks. So in today's video, I want to break down 10 essential questions that you should really be considering or even ask a company if they're offering stocks. So a stock is a type of security that gives an ownership interest in usually a publicly traded company. Basically, you are buying a portion of that company by buying stock. And an individual unit of a stock is called a share. And so to put this in better terms, you could think of, I have stock in Tesla, or I have 100 shares in Tesla. And then if you say the unit of shares, 100, you can times that by the current market price to get how much that is actually worth. So why does this matter to you as a real estate agent? Well, there are companies out there that say they offer stocks. However, there are 10 glaring questions that you need to first ask yourself and this company before you even consider something like this. So the first question you should be asking these type of companies that are throwing out the buzzword of stock is there a vesting period? Do I need to stay with the company a certain amount of time before these stocks or shares unlock themselves? And oftentimes I've seen with big companies that yes, there is some sort of vesting period, and oftentimes it's around 3 years. Now, why is everybody landing around 3 years? Well, I'll tell you the honest truth. It's because year over year, there's an over 85% turnover rate in the industry as real estate agents. So do the math, over 3 years, there's probably a greater than 9 out of 10 chance that that real estate agent has left that company, has terminated their license, expired it, retired it. They're no longer with the company, greater than 9 times out of 10. So that means if you leave within that vesting period, most of the time, you don't get that stock. It goes back to the company. So life happens. We know that. Maybe disagreements happen with the company. I've seen it time and time again where agents have these stocks or these stock options and feel trapped because they can't leave. Otherwise, that money fully goes away. So check, is there a vesting period? The second question is how often are these stocks, shares, stock options granted? Is this a one-time offering or is this going to be continuous over the course of the company? Now, this can really matter because if you're enticed into stocks, but this only happens for the first year, now all of a sudden that goes away and you lose that future benefit to you as a real estate agent. The third question I want you to ask or consider is how is the strike price of this stock or stock option determined? Is it at current market value or is it determined by the company itself? There are actually ways where a board of directors can tell you that this share is worth $1. And let's say they say, hey, we'll give you 1,000 shares and we're telling you they're worth $1 a piece, even though it's a privately held company, never been established before, what the open market actually determines these are worth. So that's very important to find out. What they're giving you, who determined what this is even worth? Because there's oftentimes a lot of restrictions of what you can actually do with private shares. The fourth item to consider is how is this company going to provide the liquidity in the future when all of these stocks or stock options are sold off? Does the company actually have enough funds to back this? Let's say you have 300 agents, you gave out 10,000 shares a piece, and you said they were worth $1 each. Well, 300 times 10,000 is going to be $3 million. Is that company liquid enough to all of a sudden the next day write a check for that amount of money? And it would oftentimes surprise you. And so you can determine this by asking, what is the balance sheet of the company? What is the projected pro forma of the company as well? Is the money actually going to be there by the time these shares or stocks vest? Number 5 is how does the company's growth potential and financial potential impact these stocks that are being offered to you? So let's say this company is break even and all of a sudden they're continuing to grow, but they continue to expand their means. More offices, more brokers, more expenses. And this company is still break even or losing money or barely profitable. Did the value of your stocks actually go up? Is there a better mode of return or investment that you could have made that would have yielded higher results? Number 6 is, are there any restrictions set on selling these stocks? Are there any blackout dates? Are there any limitations? Maybe you're only allowed to sell so much at a certain period of time. Even with vesting periods, sometimes they issue these stocks or shares on the day you have a sale, and that starts a 3-year clock. Well, let's say you have another sale 3 months from now. Well, the 3-year clock from that sale is 3 years from that date. So you're always stuck in these vesting periods. And what are the restrictions if you're actually going to try and sell these? Number 7 is, and this is really big, is what is the financial health of the company? Have you ever seen a profit and loss statement for that company? I see a lot of agents get excited like, oh my gosh, they have stock at this company. but they've never even seen the books. They've never even seen a profit and loss statement. They don't know if this company is even profitable, but yet they want to receive stock from an unprofitable company. So be very careful. And do you actually know the financial history of this company? Number 8 is, can you sell or transfer these stock options, stock grants, shares, whatever the company is issuing? Can you actually exchange these or sell these before the vesting period? Maybe there's penalties that you're unaware of. Maybe you can't and you would lose it all. So make sure to check the fine print that if I leave within the vesting period, can I even do anything with these? Number 9 is, are there any tax implications with what's being offered from this company? So sometimes, it doesn't happen all the time, but you're given something of value. Sometimes that can lead to tax consequences. Well, if you have a vesting period, that means you were given something of value that you can't sell right now, but now all of a sudden you may have to pay taxes on that. So I would be very careful and check, are there any tax implications with this sort of offering? And last but not least, can you consult with an attorney or a tax professional regarding all the rules and restrictions regarding these offerings from the company prior to making a decision? And the response of the company oftentimes can tell you whether you're comfortable or not. If they say, no, we need a decision today, you might feel rushed. Maybe there's something else being hidden, or do they allow you to take the terms and go make sure that everything aligns with what you're looking for? So after asking these 10 questions, what do I honestly think about these companies that are offering stock right now? Because it's the buzzword, it's the shiny object. What do I think about it? Honestly, I think it's a little bit of a gold rush. And hear me out. If you go through these 10 questions honestly with yourself and ask this other company, it starts to raise a lot of red flags. Wait a minute, I've never even seen a profit and loss statement for this company ever. I don't even know if they're profitable. Do they have cash reserves account? Do they even have money in the bank? There's a lot of companies operating on debt right now. Think about this. The vesting period, you have to wait. You're almost trapped there for several years and can't unlock these stock options or stock grants or whatever they are unless you've stayed that long. That means you're staying that long paying a split to this company. There's all these rules, there's all this fine print. What I'd much rather prefer for a real estate agent is go pay them 100% commission. And then what can they do with that? They can invest in whatever they want. I don't want to pitch you're going to get rich quick, you're going to build all this wealth. No, instead I'm going to pay you 100% of the money that you've earned, and you can go invest whatever you want without rules or regulations. Think about this for a real estate agent. You could get a Roth IRA account, and within that Roth IRA account, which can turn into tax-free money by the time you retire, you can go buy S&P 500 index funds, which historically have a 10% rate of return or better. So that means you're investing in the 500 biggest companies all at the same time, not just putting all your eggs in one basket, especially after going through these 10 questions. I'd much rather put it through something that's tried and true, historical returns of 10% for the 500 biggest companies. Guess how many real estate companies are in the S&P 500? Maybe one, Berkshire Hathaway. But they own dozens and dozens of companies under their umbrella. They're in insurance, they're in rail, they're in consumer goods. They have dozens of companies, and they're the only ones that are among the S&P 500. Not EXP, not Compass, not all these other companies that are starting up with stocks. So just make the right choice for you. And the choice for me and helping our agents is, let's pay them 100% so they can do what they want to do with their money, invest for them without rules, and help them achieve a level of financial success they're hoping for, and just give agents the best chance of success. So if you have any questions or you think I missed anything, comment down below, and I'll see you next time.